All right, so with 2024 coming to a close, everybody's wondering what's going to happen to the Canadian real estate market in 2025. And it's anyone's guess, but in this video, I'm going to be breaking down a couple possibilities and then giving you my opinion on what I think is the most likely possibility. So first things first, we're going to get into unemployment. This is the elephant in the room. This is what everybody's talking about. So, if we go look back at the 80s and see what happened, May of 1981, unemployment started spiking and literally just went in a straight line upwards until 1982. And one thing that you can basically notice every single unemployment cycle is that basically once it started, it really got started. It just went in a straight line upwards until it peaked and rolled over. Same thing with 2008, same thing with the 90s, same thing with the pandemic. And now what's different about today, and what's interesting is that doesn't seem to be happening. We seem to be doing a slow grind upwards. But I'm willing to bet at some point we're probably going to get that straight line up into the sky of unemployment. Now, what I do want to show you is if we go back to the 80s, unemployment started rising in summer of 1981 and then peaking in December of 1982. So it went from basically quarter three of 1981 to quarter four of 1982, right? Now, if we look at what prices did during this time, right? So what did I say? Quarter four, 1981, quarter four, 1981. So right as unemployment started going up and doing its parabolic rise into the sky, that's exactly when prices started coming down, right? What did I say? Quarter four, 1981 to quarter three, 1982. That's pretty much right as unemployment peaked. That's when the real estate market bottomed. Now, if we go to 2008, right? This is quarter three, 2008, all the way up until quarter two, 2009. So quarter three, 2008 to quarter two, 2009. And then again, basically right before unemployment started rising, you can see the real estate market peaked out. And then it actually bottomed before unemployment peaked, because unemployment peaked in, was that quarter two, 2009, quarter three, 2009? Yeah, quarter two, 2009. You can see that prices were already rising by quarter one, 2009. But in both cases, as unemployment was rising, real estate prices went down. Now, so far today, as unemployment has started rising, prices have not gone down yet. What I find to be different about this time is in pretty much every previous case we had unemployment start rising, real estate prices were at the peak before unemployment started going down. This time around, we are not at the peak. We are 20% off of the peak. So the drop that you could be waiting for that is associated with rising unemployment may have already happened and may already be priced in. That's the difference this time. May not be, right? We could see further cuts off of this price, but I'm just saying that is a possibility. Now, if you look at the prices, right? So if we go back to say, the 80s, right? 23 to 21, prices dropped 10% during that, historic rise in unemployment from 7% all the way up to 13%. That was a 10% correction in real estate pricing, right? If we go all the way up to 2008, what is this, 97 down to 88, a little bit more than a 10% correction again during that historic rise in unemployment. Now we go back to current day, we are already down 251 to 220. What is that, like 15% basically? Somewhere around 15% off of peak pricing. Now that being said, I actually believe this last leg where we went from 222 to 251 probably should have never happened. If we actually follow this growth path, we probably would have been somewhere around like 230, 235 if things weren't as crazy. And if we were around 230, 235, again, that would probably roughly be about a 10% correction, just like every other time we've seen this happen. So what is going to happen in 2025? So here's the first possibility. I have been talking to sellers every day for the last 3 years, having the same conversation over and over and over again. Doesn't matter how bad somebody actually needs to sell the property that they have. Like, they need to sell. I've had so many of these conversations where the person holding this property is literally screwed and they're continuing to hold. They want to wait till next spring. They want to wait till next spring. They all want to wait till next spring to see if the prices are going to be higher. Now, the prices might be higher this next spring, but I just want to reiterate that even if the prices are higher, they're not going to be 10, 15, 20% higher. I would have to guess 3 to 5%. There's a lot of people holding property right now that need their property to go up like 150 grand, 200 grand, $80,000, like 15 to 20% to get out of this property and not lose money. That's probably not going to happen in the spring. So a lot of these sellers that I've been talking to that need to sell, that have been waiting for higher prices, I think we're getting to the end. I think they're going to have to sell. And the question is, how many of those people exist? How many of them are going to list their properties in the spring? And is that going to push down prices? Because if you're at the end of the rope, you ran out of savings, you need this cash now, you need to get rid of this property, the price is no longer important. Like, you need to sell this property, right? So I think a big question mark is how many of these people are just going to finally capitulate, give in, and sell their property at whatever the market price is this spring. And that could definitely push prices down at the beginning of the year. And then, you might see a scenario where prices drop to a certain point with the interest rates being lower, with all these new mortgage rules, that prices begin to start their climb back up in the back half of the year. So that's the first, I guess, scenario that I would say. Now, the second scenario is that because interest rates are already lower, because sentiment has improved, because all these first-time home buyers and people like that have these 30-year AMs on new builds. They can put less money down on a $1.5 million home. Because of all these new mortgage rules and lower interest rates, we could actually see prices rise in the front half of the year. And then after the prices rise, you would see demand taper off because unaffordability would then rise again. And, that would basically line up very well with pretty much what happens every single spring, right? If you see every spring, the price goes up and then it tapers off in the back half of the year. The price goes up and then it tapers off in the back half of the year, right? Even if you go back to here, again, prices go up in the spring, they come off in the back half of the year. Prices go up in the spring. This time they kind of flattened out back in 2017, but you get what I'm saying. I think that's a very likely scenario, is that the prices actually do go up in spring because real estate's more affordable, because of the interest rates, because of the mortgage regulations. But then just like we see every single year, the prices taper off and start going down again in the back end of the year. And maybe that only equates to prices being flat, maybe a couple percent up, possibly even a couple percent down. And then the third scenario I have in here, which you probably would have guessed, is that we get that meteoric spike in unemployment that seems like it's probably coming any month now. And then that's when we get the price correction that aligns with every other time we've had that spike in unemployment. And maybe you see prices come off 10% exactly like it happened every other time. Now, with all these scenarios, what do I think is the most likely scenario? Honestly, this is so difficult to put a prediction on. We are in very uncertain, very volatile times. To be honest with you, I have no idea what's going to happen. But I think the market likes to surprise, the general public. The market likes to surprise the masses. Whatever everybody thinks is going to happen is not usually what happens. So I think I'm going to have to go with this stance this time and say that the drop that comes from that meteoric rise in unemployment may have already happened. That may already be priced into the current market where we sit right now. And even if unemployment does go up quite a bit, we may not actually see prices come down very much or much at all, right? Which I know sounds crazy to say. So I think the most likely scenario here is the second one, where prices rise in the front half of the year, and then they start falling in the back half of the year, just like they've done every other year in the past. And, by the end of the year, prices are probably going to be somewhat similar to where they are right now. Again, you're going to see them rise in the front half, fall in the back half. And again, to restore affordability in Canadian real estate, we don't necessarily need the prices to come down. They just need to not go up. And if they don't go up for a long enough time frame, eventually the rest of the economy will catch up with where the prices currently sit. So, I mean, if we get a couple more years of prices going up in the spring and then, coming back down in the fall and winter, eventually we would, in theory, get there. But at the end of the day, I have no idea what I'm talking about. I have absolutely no idea what is going to happen. I just wanted to present this information to you guys, and you can come up with your own conclusion of what's going to happen. If you enjoyed this video, please do subscribe. I'm That Agent Kelly, and I'm making moves to move you.